We knew China was going to be bad, but I wonder if the share price reaction, about 2.5% to the downside, means that China was a little bit worse than even we thought.
Yeah, it was, and also North America wasn't so great either. Overall, what's really hurting Ford shares in aftermarket trading right now is that they not only missed for the quarter, but their outlook for the year is less than analysts were expecting. Not by a lot, but hey, it's never good to surprise on the downside. They're having trouble in China, but they're losing money there. So it's not just that the market isn't doing well. Ford is also not competing very well in that market. So it's sort of a double whammy for them. They're not doing very well in terms of market share. They just don't have the right vehicles for the market. And it's a tough place to do business as is. Even General Motors, which has done very well in China, has seen profits contract this year in the market. So it's a tough place to do business, and Ford isn't very good there. They got there late, and they're having trouble now.
And it seems as though almost the CFO is being a bit flippant on this, Leigh. We've got Tim Stone saying we're seeing some good results in the first half of the year, but there's a lot of work to do, otherwise it wouldn't be fun. Whether axing thousands of people is fun, we have yet to understand. But give us a sense, Leigh, on what are you expecting from these big auto companies, and how much, when you see a 35% increase in the share price year to date, whether that's really reflective of some of the concerns about these businesses?
Yeah, I mean, the question is, what do you expect him to say, right? Like, I think it's the same thing that investors feel, which is, this is out of our control, right? Like, a lot of this stuff is just out of his control. He is so at the whim of the macro factors affecting these markets that it's hard to blame him, and it's hard to blame investors for slinging this stock all over the place, you know, here and there. And then for other investors to just sit there and say, I don't want to have anything to do with this because I don't have any ability to actually control the outcome of my trade here, given that I'm right about factors X, Y, and Z, when I could just be wrong about factor A and B that are completely off the board for me.
So, David, when you look at the results today, and you also look back at the announcement that Ford made, I guess it was a couple of months about cutting jobs, what's sort of the structure or the future, not only of Ford, but of GM and the other big automakers? Are these just going to have to be leaner operations? Is there some sort of just structural change in the consumer market that's not going to sort of revert back to what these companies were used to?
Yeah, it is. First of all, the U.S. car market is just softer. And even though China is important for everybody, they just make a lot less money there than they do in the U.S. And when the U.S. is softening, it just makes it tougher to get traction in other parts of the globe. So in Ford's case, they do have job cutting that they still have to do. They have a bunch of new SUVs that are coming out this year that they just haven't fully gotten to market yet. So there's kind of more that's on the come for them in terms of bringing the business really back. But you know, with that backdrop where you've got a softer U.S. market, not a terrible one, mind you, but one that is just requiring more incentives, which means lower profitability and softer sales, you've got money being poured into things like electric vehicles and self-driving car technology, none of which is really going to make anybody a profit for probably several years to come at the least. So you've got investment and engineering costs and something that's not going to bring you much revenue, if any, and certainly no profitability. And then you've got your core operations, two biggest markets, U.S. and China, being very challenging at the moment. There's really not a lot of daylight for any of the car companies at the moment. That doesn't mean they can't make money, but they can. They're going to have to get leaner to keep profits up.